Bianchi joins me here today, and you can learn what he's up to by heading over to strsearch.com. And if you're in the real estate world, you know that STR stands for short term rental. So we're going to be talking about how you can use data to help select the right properties.
Thank you.
So, got to start things off, and we're going to try to truncate this because I'm sure you've shared this a few times over. Tell me how you found your way into this.
The quick version is that I started an Airbnb business and built it up to about 15 plus properties. And the one thing I did the best was actually understanding the data. So for whatever reason, had an knack for it. I fell in love with the data and being able to see how much every single Airbnb was making. And when you fall in love with something, you could become obsessed with it. And if you become obsessed, then you put the time in to actually get good at it. And so I got good at understanding the data. COVID came around and kind of wiped out the business that I built up at that point. I was able to sell it off, but it wasn't all that great. And then I just honed in on the one thing I did best, which was understanding the data and figuring out other ways I can help other people who were in the industry that didn't know how to understand the data. And I've pretty much been doing that since 2020, just helping people understand the data. So yeah.
I think this is really important that you focus on the data because there's a lot of people who get into real estate investing that fall in love with the property instead of being honest with themselves and making sure it's going to perform.
That's the probably the number one mistake I see people making is having a lot of emotions attached to a property and overestimating what they think they can do and taking a look at, amazing Airbnb listings that exist and go, "Oh, I can beat them 5 different ways." And like I look at those listings and I'm like, "I can't even beat them 5 different ways." And I've been doing this for 7 years, you know what I mean? So, yeah, getting too emotionally attached I think is a big mistake and not just staying disciplined to the data.
So talk about this service that you've developed here regarding is this a platform that you've developed over time?
It is a team. I have a team of people, and what we do is we help people identify properties that will be strong cash flowing Airbnbs and good sound investments at the same time. And we have, again, obviously a very disciplined approach to the data and being able to understand where to go, where not to go. So which markets to go into and which ones to avoid. And then understanding what's the absolute best thing to buy within those markets and how to set them up in the most optimal way. So we don't actually help people design or set anything up, but we will give you a blueprint of what you should do and what your designers should like do to be able to optimize the listing in the best possible way to drive the most amount of revenue. We help those individuals who either struggle understanding the data themselves or don't have the time to do it. And we help place them with properties that are going to work.
Well, you don't have to tell me your secret sauce, but could you give us the top 3 data points that somebody should be considering?
Yeah. So, talking about giving away the secret sauce, I actually did create a 40-hour long free course that does give away the secret sauce after finding 120 properties and all of them being cash.
You commit to 40 hours.
Well, 40 hours, you got a skill for the rest of your life, you know? But yeah, so the top 3 things that I would be looking for. It's a good question because there's a lot of variables. So I'm trying to think what would be the absolute best. The first metric that I look for in the long-term rental space, they have the 1% rule, which I think a lot of people know, right? And in the short-term rental space, I'm trying to push this 20% price to rent ratio rule. So if I have a home that I'm going to purchase for around $500,000, if it can make $100,000, which would be 20% of the purchase price, then it tends to cash flow at an amount that I'm gonna be very happy with. Some people are okay with less, some people need more. That's usually that sort of sweet spot that I found, and that's gonna be the first metric that I'm gonna look for. So if I'm gonna look into a market, I'm simply gonna try and understand, do these homes have the ability to meet that metric? And if they do, then I'll deep dive and build a buy box for that market because I know there's potential to work there, right? And then the next sort of metric that I'm looking for is trying to understand if there's a luxury demand within the market. Now, this isn't 100% needed, but if there are luxury type properties or properties that are performing extremely well within that market, then I know that I can usually take an average type of property, add a lot of value to it through amenities and design, that it then becomes comparable to the luxury property. So the luxury home's always selling luxury. Like, look at our luxury kitchen and our luxury bathroom, right? Where it's like, okay,
Mhm.
that's great, but what if I could sell you an experience where your kids are going to have immersive game rooms and your kids are going to have, a whole resort style backyard that's going to be a ton of fun. The idea there is that if you can find a market that has that luxury pull, you can almost take the guests that would have stayed at the luxury home and get them to stay at your home because it's more fun, more entertaining, and it's more of an experience. So that's the sort of the second metric that I would say is a good one to look for. And then the third one, if you get those two, you're already off to a really good start.
Maybe you can boil it down to just those 2.
I mean, if you can find a market where it does meet the 20% price to rent ratio and you can see that there's luxury demand there, and then thirdly, you think you can compete with that luxury demand, right? You can find homes that will be able to allow you to compete, then it's just a matter of putting it all into action, right? You then understand what that top percentile of properties within that market are doing well, and then actually implement that to your property to make it work.
Sure. No, that makes a lot of sense. I think another thing too is that people would need a little help with is regarding that forecasting. They get these properties in my part of the world. We have highs and lows in Minnesota
Mhm.
regarding people's travel, especially, if the lake areas are great in the summer, but unless you are catering to snowmobilers in the winter, you really can have some drought seasons there. So how do you help people with that piece of it?
If you're working directly with us, we're going to be helping you through the entire process, right? We're going to be able to help you identify the right market, the right realtors, the right properties, the right underwriting, and do the data analysis and revenue forecasting. We'll walk through that if you work with us. But if you're trying to do this on your own and you're trying to figure it out for yourself, my suggestion is to go through my course. That's free. Honestly, you learn so much there, but the quick and dirty is that you want to first make sure you're working with good data. I use airdna.co as my place, and if you know that you're working with good data, which is a full-time host and a property that has been tracked by AirDNA for almost a full year, you can go to YouTube and watch videos of people explaining good versus bad data. And once you understand that, you then have to find the properties that match up best to the properties that you're considering within your area. And it's pulling a comp list, right? And so, if I'm in a city and I'm looking to buy a 4 bedroom, there's a whole bunch of 4 bedrooms that I can match up against. Well, then I'm going to bring in all of those 4 bedrooms. And what I like to do personally is pull them into a spreadsheet. And if I can get that data out of AirDNA into a spreadsheet, what I'll do is I'll organize them from who's making the most to who's making the least. And I'll grab a range of like stellar properties, average properties, and then below average properties. And I'll make notes on every single one of them as I'm going through about if my property can beat them or not. Okay. And the simplest way to go about this is this is what I refer to as a base comp. It is a property that you feel extraordinarily confident that you will be able to beat it. It's not how much you want to make or need to make. It's just a property you know you can beat that is comparable in size and amenities, right? And that could
Mhm.
be that you're gonna add more design or you're gonna add more amenities or you're gonna host better, you're gonna take better photos or whatever that may be. It's like you can beat that person. And when you see that, that's a base, meaning that if you can put together a better listing, you should make more than them, right? And then what you do is just work your way up until you get to the point where you know you can't beat those homes, and that's your top comp. And then what you end up having is this range between what you're not gonna be able to do because the top home is bigger, better, more luxurious, better view, better pool, whatever it may be. And now you have this beautiful little range, and that's gonna be you underwrite it based off of your worst case scenario, your best case scenario, and kind of that mid-range. So that's how I've done the forecasting in a 1-minute explanation.
Sure. So I'd be curious as what your data might show then regarding the amenities. You mentioned pool and stuff just a moment ago.
Mhm.
Is there anything there that would maybe surprise people that we focus on that may not actually attract people?
So there's no clean way to be able to know how much one amenity is going to drive additional revenue in, right? So like, hey, if I had a hot tub, will I make $20,000 more a year? There's no way to know that because there's so many variables between every single individual listing that it's not a true A/B test and it's kind of a little all over the place. Some people have tried to say that they figured it out. I have my doubts to it, but I'm open to being proved wrong. With that being said, the way that I've gone about this is if I'm trying to compete, right? And I truly think about it like these are my competitors If I was in business and there was, I was running a Subway and there was a bunch of other sandwich shops, it's like, what do I got to do to beat those sandwich shops, right? And that's how I think about Airbnbs. And I go, okay, that's my competition. And I look at what they're doing and I say, if I need to make $100,000 and this person's making $100,000, what is everything that they have? Do they have a hot tub? Do they have a pool? Do they have a pool heater? Do they have a putting green? Do they have hanging lights? Do they have a mural in the backyard? Do they have all of these things? And then I'll go look at the next person who's roughly around that same range and I'll list out the same thing. And then what's going to happen is I'm going to notice the amenities that the majority have. So let's say 4 out of 5 have a hot tub, 5 out of 5 have a pool, 4 out of 5 have a pool heater. Go, okay, these are referred to as my must have amenities. There's no ifs, ands, or buts about it. If I want to be able to compete and match up with these people, I have to be able to have those things. Because as a guest going to look at these homes, if I'm deciding which one I want to rent out and the one doesn't have a pool heater, why would I pay the same amount for that home if it doesn't have a heated pool? It's just not worth as much to me. And so then therefore I'll pay less for the home. And then as a host and the owner of the home, I end up making less than the competitors I'm going up against. So this is what the first process is. Figure out your must-have amenities to be able to compete against the people that you want to be competing against, right? And being able to do as well as. The second part to it is what could I do to my listing to do more to outcompete my competitors? How can I make my listing better than theirs? What are the things that I could do? And for that, there's no direct way of saying exactly how much more you're going to make, but logically, if you have a listing that has more value, you should get rented out for a higher nightly rate, right? And then it allows you to be more desirable in comparison to your competition. So even if you did have to price at the exact same price, you would be giving the guest more things, and that makes your place worth more, right? And so this is what I refer to as the nice to haves. So if you're putting together an Airbnb and you amenities is a really big deal in Airbnbs nowadays, especially if you want to make money. And so you got to get those must haves. Then you want to get your nice to haves just to be able to compete. Whatever additional money you have, you want to put it towards the nice to haves. And when you're trying to decide what nice to haves to do, you want to focus in on a demographic, right? So if you're trying to create a bachelorette pad, which is going to be just for the bride and the bridesmaids, and it's going to be an amazing place, and it's going to create a really great experience, and you've got pink everywhere and a lot of like girl themed stuff and selfie walls and makeup areas, you're not going to put a jungle gym in the backyard. That would be a waste of money because that's be focused on kids. But if you were to do it for families, then it makes more sense to do it that way. So when you're trying to figure out your nice to haves, you got to focus on one demographic. If you market to everybody, market to nobody. And so that allows you to be able to strategically purchase those amenities. I said a lot there, but what were your thoughts?
Well, I really like how you ended that with the whole you if you market to everyone, you market to no one. Yeah, I think that's actually a pretty big gap in what people do just in general.
Yeah, it truly is. And, Airbnbs are businesses more than anything, right? Way more than what a long-term rental is. It's a business, and you've got to be able to understand basic business principles. And, marketing to everybody is not a strategic way to go about it.
Just to remind everybody, we are talking to John from strsearch.com. That's strsearch.com. That's going to be a clickable link in the show notes. If you found some value in what we're talking about so far, do us a quick favor. Share this with one of your investor friends, especially if they're looking to get into short-term rentals. And if you found us on YouTube, give us a quick like and subscribe. So I be interested in knowing then, we talk about competing on amenities, but do you ever find a situation where you might find an underserved area where you don't compete on amenities, you compete on price, and you're just trying to beat the market that way?
I have not come across a market like that in a long time where you could just put a property in and sell bedrooms, bathrooms, kitchens, dining rooms. You know what I mean? Like that's what every Airbnb offers and just beat somebody on price. One of the main reasons is simply due to the price of the home and the interest rate, right? So that combination there gives you such a high annual expense. And then you've also got to clean the home. You have to pay for the utilities. You have to pay for soaps and shampoos and all those different things that your expenses are so high that if you try to buy a home and just undercut people, it's likely that you will end up losing money rather than making money. So I haven't seen anything, I haven't come across that. Like when I first got started, 2017, that did exist. People were just getting properties, renting them, buying them, whatever, throwing any kind of furniture in there, and then they were cash flowing, right? And they could lower the price if they needed to. But it's just, I think Airbnb has developed. It's been, I think, 17 years or something along those lines that Airbnb's been around for. It's an evolving asset class that, and when anything is evolving, it's just consistently getting better and better and better and better. And it's kind of got to that point where the idea of just being able to compete on price and selling bedrooms and bathrooms has kind of gone unless you're in the middle of nowhere. And then at that point, there's not a lot of travel demand, right? So, anyways,
Mhm.
yeah, that's what I've noticed.
Well, I think the reason I ask about this is because Airbnb pricing is, in some cases, in some markets, it's gotten a bit out of control to the point where I think a lot of people are starting to question, why aren't I just getting a hotel?
I don't disagree with you even a little bit, which kind of goes back to the ever evolving Airbnb industry and short term rental industry. I truly believe that Airbnb is still trying to figure out where it fits in the market. And we have 2 million Airbnbs in the United States, 5 million over in Europe, I believe. And I honestly see it as like one gigantic test of what works, what doesn't. And individual hosts are thinking they've got it figured out, and then they go and do it, and it doesn't end up working out. And then the market, so what you just said there, the guests and the individuals who are actually staying at the home decide what they will do with their dollars. And if they eventually decide that Airbnb is ridiculous and we're not paying these prices, they will start to do something else with their money, whether that be another market or hotels or boutique hotels, right? And I think as that happens, those Airbnbs that maybe are overpriced and where they like are ridiculously overpriced will start to make less money. The homeowners will realize that this is no longer working. They will have to sell off the property and shift to a different spot that makes more sense. So, do you see what I mean by that? Like it's
Mhm.
still figuring out where what works, what doesn't work, right? Like in my opinion, a $3 million home needs to make like 300 to $400,000 a year to be profitable, right? So it's somewhere around maybe around like 300,000, I think. And it only has 365 days to sell, just like everybody else. It only has 365 days to sell. It's not some widget that you can sell a million of. And so they have to price their home at a ridiculous price to be able to cover their expenses. And if it gets to the point where it's so ridiculous, people are just gonna be like, I'm not staying there. And then they're gonna eventually not make money. They'll not make money for a couple of years and then they'll sell it and they'll walk away from it. And all of a sudden, the Airbnb industry and sort of ecosystem has sorted itself out, I guess is the way to put that.
Another thing that I think is a challenge, especially for people who are getting into this for the first time, is you had mentioned that you have a few million in the United States, 5 million in Europe. How do you compete against a pool of individuals like this, especially when you start out? How do you how do you get found?
Oh, the Airbnb pushes you for those reasons, right? And it's, it's a million across the entire, or sorry, 2 million across the entire United States. It doesn't scare me even a little bit, to be honest. Obviously, I've been doing this for a long time, but I like the competition. I like when a market has like a lot of properties because that tells me that there's a lot of rental demand. And so I am a huge proponent of do a lot of research before you get in there, right? Like you wouldn't open up a pizzeria without doing your research, right? Knowing that there's 10 other pizzerias within a 20 block radius. Why would you put another pizzeria in there, no matter how good your sauce is? You would maybe try and figure out a different place to go. Or maybe you do go there because you think your sauce is better than everybody else's, and then therefore you can get more orders. And there's clearly a lot of demand for pizza in that area, right? And Airbnbs are a similar thing where it's like, hey, there's 5,000 Airbnbs in downtown Scottsdale, just the downtown core of Scottsdale. That to me could be really scary, but that just says there's a crazy amount of demand. And if you understand what the top performers are doing, you study every single top performer that's making a whack load of money, you then have the blueprint for how to win in that market. And you don't have to come up with some secret amazing sauce that your grandma made to make the perfect pizza ever and be able to outcompete people. You literally just have to look at what they're doing and do that, and then do it and market it better and price it better and manage it better, right? So, yeah, it can sound scary when you say it in that way, but it doesn't scare me even a little bit.
Sure.
Yeah.
You mentioned the business blueprint, especially around this, and it's just so important to, especially if you don't know what you're doing, to find a mentor or some information on you. You mentioned you have a 40-hour free training regarding all of this. Can I ask why you offer just giving that level of information out?
Build trust. That was my main objective. I don't think I would be a very good one-on-one mentor or like a person who sells courses and helps people through that process. To me, I was like, I have all this information and I have a process that works. Because at that point we had found 120 properties and they were all cash flow positive. I put it together to be able to build trust within the community and give people an option and say, if you want to do it yourself, here is the exact process. You just got to follow it. However, if you don't have the time or you can't figure it out, you have the option to hire me. And I'm not a great salesman. And so to me, that was like the best possible way to build out a business, build a ton of trust. And anyone who wants me can hire me. I'm not gatekeeping anything. So yeah, it's kind of an extreme strategy, honestly. I've got 5 other courses as well that are around Airbnb data that are also free, but it's just something that has served me really well. I'm okay with that model rather than the course model.
Well, can you share any stories? Like, what have people experienced and how have you been able to take them from point A to point B?
Yeah, so for the main client that I've worked with was a large institutional fund. We helped them find about 150 properties, but we also have helped individuals as well, and we started doing that within the past 10 months. We have helped identify just under 50 properties for 50 different people in that time frame. We have one lady who's the nicest human being on earth. Her name's Allison. I made a whole YouTube video about her. She works a corporate job. She wanted out of it. It was like this typical standard sort of person that wants the Airbnbs, right? Because the Airbnbs can promise cash flow and you can quit your W-2, stuff like that. So yeah, her Allison is super nice person. I helped her find a property within a market that she could afford and had with her budget, she'd be able to compete and be in that top 10 percentile within that market. The property cash flows at $3,000 a month in profit, right? Obviously, not every single month is consistent. There's high seasons, low seasons. So she's making about $3,000 a month from that property over the full year. She should make about $4,000 in profit next year. Has a 9% interest rate, which is insane. And then there was a bit of ramp up and mistakes she made. So she'll clear quite a bit. And I just recently got a message from her 2 weeks ago that she officially quit her W-2 job, which is pretty awesome. She took on some additional properties that she's now managing because she got the experience from that one. So other people are like, "Hey, can you manage my property?" And from the property that she has and the other one she's managing, it gave her enough income to be able to get rid of that W-2. And she said her exact message was something along the lines of, I've been here for 10 years, just gave my 2 weeks, and I'm never looking back. And I was like, that is the coolest thing ever. So her story is super cool. We have two types of clients. The one is Allison, who I just mentioned, who's like the person looking to quit their job. Then the other person is the high net worth individual trying to take advantage of the STR tax loophole, which allows you to be able to write off the active income that you would have. I'm not a CPA. There's look into it, right, to really figure it out. But we help a lot of high net worth individuals who just don't have the time. And there's one guy specifically who, Jiffy, like those little GIFs and GIFs. He's like one of
Mhm.
the main guys at that company who like made that a thing, which I thought was super cool. One of our first clients, he got a property in one of our core markets. The crazy thing, it was actually a property that I wanted to purchase a year before he purchased it because it was this completely rundown property. And I was like, oh my God, I could flip that and it'd be an unbelievable Airbnb. But I just didn't move on the property. And somebody else got it and flipped it. And then he ended up buying it, which I thought was like the coolest thing ever because the purchase price was actually quite a bit lower because it was on a main road. But to an Airbnb, that really doesn't make a difference. It had like one of the larger backyards. We were able to add like a pickleball court in there. It was done up really well, and it's a good performing property for him. We don't know the exact numbers just yet because it hasn't been around long enough to give us the true numbers, but I'm confident that it's going to be a winner for him. Can I share one more? There's this third one, another high wet net worth individual who's got a high paying job. We actually got him a property in Miami. Usually I don't give away our markets, but Miami is such a crazy market. He's got this property that has one of the biggest yards in Miami, and he put his heart and soul into this. So he was going for 2 years trying to find a property. He was working in different courses and trying to find a property to get. And we came with our service. He hired us and he had a property within, I think, like a month and a half, something around there. And he got it live and he did it better than I actually expected. He created this entire golf area that we didn't even recommend. He just went above and beyond. And it's truly like this real putting green, but it's got like rolling hills and sort of like water and whatnot. So it's a putting green for adults. And it's a whole bachelor pad that he created it for, right? And it's so beautiful. And then just last night, he sent me updated photos. It was like, get back out there, get better photos. The marketing on this is terrible. I gave him all these suggestions. And so he went back out there 4 hours with the photographer walking through the property, getting photos. And it's like a night and day difference. It's honestly one of my favorite properties in our whole portfolio right now, just because of how beautiful it is. So
I'm always amazed by that in the fact that, whether you're a fix and flipper, short-term rentals, we go through all of this time, money, effort to get this property the way you're dreaming of to find your financial freedom. And then when you're right at the finish line, we take some photos with our cell phone.
I know. Couldn't agree more. He put so much money into that property, and then the last thing, which would be like a $500 photo shoot, it just didn't execute it properly at all.
Mm.
And he knew, but I like really pushed him on it. I was like, get that fixed ASAP. So yeah, that's hilarious. I couldn't agree more with that one.
Well, this has been a fantastic conversation, John. I'm going to send everybody to that STR search, strsearch.com. It's going to be a clickable link in the show notes. We could go a variety of different ways, and you can already tell that we're just scratching the tip of the iceberg, because I'm sure your 40 hours also helps people. How do you find a property manager? How do you set up your cleaning? How do you set up maintenance? How do you do all of this other stuff associated with STR?
It actually doesn't.
Covered.
I stay disciplined on acquisition. I'm just acquiring the best possible property to give you the best possible chance.
Maybe some of the other ones you offer cover some of that.
No, none of it. I always say it's not my specialty. I'm not good at it. I built up an Airbnb business. We got to about 15, a little over around that number. And I just wasn't excelling at the operation side of things. And I don't think I should be the person teaching it. So I just stay disciplined to what I do best and try to not make up and pretend like I know other things.
I appreciate you staying to the niche. That's it's something that real estate investors, especially entrepreneurs, have a tendency of chasing the shiny object.
Couldn't agree more. I struggle with it as well, even within the niche of what I'm doing. I struggle with it constantly. But yeah, it's been very helpful to stay disciplined. Let's say that.
Well, if you're ready, then John, we'll jump into the rapid fire questions.
Let's go into the questions.
Okay. Well, first of all,
The what we talked about earlier, where people get really emotionally attached to the listing in the short-term rental space, people do this all the time, where they tell themselves that they're going to be a top performing listing and be able to beat absolutely beautiful listings, like perfectly executed listings where there's almost nothing that they could do to improve it. And people are like, I could see ways that I can beat that. And then they have a budget that would not even remotely get them close to being able to beat that. Right. So I think that's one of the biggest lies that people tell themselves in the short term rental space.
if you could go back in time and give your younger self a piece of advice, what would it be?
I've thought about this a lot. And the real answer is to figure out how to be able to buy properties with other people's money, because eventually you run out of your own. And the reason I say I thought about this a lot is because I've known that for a handful of years now, and I still haven't done it. And so for whatever reason, I do think that's the most high crucial thing, but yet I don't take action on it. I mean, I'm obviously building my business and helping other people do exactly that, but I feel like I don't do it enough myself. The longer you hold that property, the better it is in the next 30 years from now.
Do you have a book recommendation?
I love Atlas Shrugged. It is the core philosophy in my brain that helps me understand reality and business and people. And I think that Ayn Rand is just, she's really good with her philosophy. There's some flaws, and I know that that book gets a lot of hate. I could care less. I love it. I think it's a beautiful book. That one and Fountainhead. Fountainhead is the greatest book that I have read on integrity and what integrity would look like over a 30-year period. And how if you do not have integrity, good luck when you get older. Good luck. So, yeah, those are my book recommendations.
Yeah, yeah, brace yourself. If you haven't picked up that book, you better have been frequent a gym for a good year or something. Like it's a lengthy one, but
Yeah,
it is well worth the read.
it's 1,000 pages long and 60 hours long in Audible. I've gone through it like 4 times on Audible. Road trips, stuff like
Yeah.
that. It gets me energized.
So, and then lastly, what single strategy, process, or tool have you implemented that has had the biggest time-saving impact to you or your business?
Building a buy box. The mistake that people make is they will figure out what their purchase price is, what market they would like, and then they'll go look for properties that are available, and then they'll study property by property, trying to figure out which one's the best. Whereas if you just go into the market and study all of the existing Airbnbs that currently are there, figure out what the revenue drivers are, which ones do best, and why, then you create this buy box of, if I buy a 4-bedroom, 2-bath with a pool and a pool heater and enough room for a pickleball court and a garage I convert to a 5th bedroom, then I'll be able to make $150,000 a year, and I just gotta buy the property for under 700,000. You go, "Cool." That to me is a cheat code in the Airbnb space.
I think developing your buy box is a cheat code for real estate in general. I don't think enough people do that, and it helps remove some of that emotion.
Yeah, without a doubt. If you struggle with emotions or getting emotionally attached, or you find like you're an emotional person on other things, build a buy box and it'll get rid of all of that.
Yeah, and more times than not, people fall into this trap of justifying the purchase. Well, John, this was fantastic. I really appreciate your time. It was great meeting you. Again, it is strsearch.com, but I hope you'll consider coming back again sometime. This was great.
Let's do it. If you wanna have me back, just let me know and we'll go. I really do appreciate this. This was fun. And again, thanks for having me.